Hey guys, what's going on? Jebb here, and in today's video, I am going to be teaching you how to master cryptocurrency trading with 3 skill sets and 6 steps to take you from zero to hero and show you how you can profit in cryptocurrency markets. Guys, by the end of this video, you're going to walk away with a much better understanding of how to make the most out of the volatility in Bitcoin and cryptocurrency so that you can profit and make more money in this space. If you enjoyed today's video, make sure to hit that like and subscribe button, but without much further ado, guys, let's go ahead and dive right on into it. Before we get further into the video, let's talk about Bybit, the best and most reliable trading platform. Bybit is great about helping you stay up to date on real-time market fluctuations, keeping you informed on what your crypto is doing. Your funds are securely stored in a multi-signature cold wallet. This allows for collections and withdrawals to be made via offline signatures. If you're looking for a great trading platform, you can get connected by using our Bybit affiliate link down below. Guys, we're going to start with the first 3 skill sets. The very first thing that you need to know before you move into trading are some basic skills, and the first one of those is called fundamental analysis. You might be wondering to yourself, Jebb, what is fundamental analysis and why should I care if I'm trying to do trading? Well, it's a very good question. My friend, fundamental analysis is going to come into play when we go through those 6 steps I just mentioned here in a second. Fundamental analysis is understanding what makes a cryptocurrency tick. It's understanding what makes a cryptocurrency project worthwhile. Fundamental analysis is when you go and you read the white paper, you read the website, or you look at the team behind a cryptocurrency. Fundamental analysis is reading the news on a cryptocurrency. Fundamental analysis is understanding developments around the cryptocurrency. Fundamental analysis is understanding the regulatory space around a cryptocurrency. Fundamental analysis is incredibly important and is one of 2 types of analysis that we're going to talk about. To become a master cryptocurrency trader, you first have to understand fundamental analysis. Why? So that you're able to pick the right cryptocurrency. For example, if we scroll down here through CoinMarketCap, you will probably see some cryptocurrencies that you are a fan of. But my friend, I encourage you to never, and I mean never, trade or invest in a project that you don't understand. For example, the majority of trading that I've ever done, I've done on either Bitcoin or Ethereum because I'm very well versed in the fundamentals of these projects. If you don't fully understand a cryptocurrency before you start trading or investing in it, there's a high likelihood that something that you didn't see coming is going to come into play and mess up your trade. You don't want that to happen. So skill number 1 is learn fundamental analysis. Skill set number 2 is learn technical analysis, which is what we specialize in here on this channel because technical analysis is the gate and key to trading. In the same way a physicist needs to understand math and an interior decorator needs to understand color theory, a trader needs to understand technical analysis. It's one of the basic skills for doing trading. Why is that? Well, my friends, if you're looking to make a trade on Bitcoin and you're trying to long or short this market and you don't understand the technical analysis, then you're not going to understand where to enter your trade, you're not going to understand where to put a stop loss, and you're not going to understand where to set your exit. You're not going to understand your risk to reward ratio. You're not going to understand all the factors in play for why Bitcoin or whatever cryptocurrency you're trading in is moving, how it's moving, and where it's moving. It all goes back to the axiom, if you don't know what you're investing in, don't invest in it. It's the same thing about trading. If you don't know what you're trading on, do not trade on or with it. So skill set number 2 is to learn technical analysis. By the way, we teach technical analysis in the Cryptocurrency Technical Analysis Academy in the description box down below. I spent like 3,000 or 4,000 hours learning technical analysis, and just so you know, if you work 40 hours a week, 52 weeks a year, you will work 2,080 hours a year. I've spent a very long time learning technical analysis, and I'll teach you all about it with the first link in the description box down below. The third skill set, of course, that you need to learn is how to trade. Duh. More specifically, though, you need to understand how to set up a trade. If you're on TradingView, then there is a button right over here that you can use to grab something called a long or a short position. If you are entering into a long trade, then you can plan out your trade as follows. Let's say that I want to enter a trade on Bitcoin at $60,500 based on the technical analysis that I did earlier. Let's say then that I want to put a price target at $63,000 as that's just below a level of resistance that I've identified through my technical analysis. And let's say I want to put my stop loss right here around $59,500. So when I say your third skill set needs to be understanding how to set up trades, I'm not even so much you need to understand how to trade because that's what I'm teaching you. What you need to understand is how to use trade setups. And that's what I just showed you. That functionality over on TradingView or probably on the exchange that you're using, we recommend Bybit, you will find functionality just the same. Remember guys, The skill set you need to understand is setting up trades. That's where is your stop loss, where is your entry price, and where is your price target. I don't have time to go into all that in today's video, but you need to study it. There's your assignment. Okay, now let's use those 3 skill sets and walk through the 6 steps to setting up and executing a profitable trade. Number 1, you want to make sure you're trading the right cryptocurrency. So you're going to use that fundamental analysis that you learned in skill set 1. You're going to look through CoinMarketCap and you're going to say, okay, I understand the fundamentals of Bitcoin. I think the fundamentals of Bitcoin are great. I don't think there's going to be some kind of curveball that's going to come in and wreck my trade. I'll give you an example of a curveball that can wreck your trade. When XRP had charges brought against it by the Securities and Exchanges Commission, that would almost certainly have wrecked your trade. You don't want to be in a cryptocurrency that is going to put you at risk for that. So step number 1 is to use your fundamental analysis on different cryptocurrencies and only trade a cryptocurrency that you believe has strong fundamentals. Step number 2 is what this channel does quite a lot of, and that's doing technical analysis on the project. Before you can set a trade up, you need to understand what the technical analysis says on a market. And guys, when I'm doing analysis, this is what it ends up looking like most of the time, but you don't need to go that crazy. You can get started with some basic support and resistance level understanding, the kind of thing that we teach in CT2A. So number 1, pick a coin with strong fundamentals based on fundamental analysis. That's why you need to know fundamental analysis. Step number 2, use technical analysis to figure out what's going on the cryptocurrency so that you can move into step number 3, which is to decide based on that technical analysis which direction, not how far, but which direction the cryptocurrency is likely to move next. For example, if I'm looking at this market on Ethereum and I look at my technical analysis, I can see that RSI is trending to the upside. We're about to see a bullish cross on MACD. We just saw a volume spike on the daily chart. We just broke resistance at $1,741. I believe that the market is about to move up. That's step number 3, is discern which direction you think the market is going to go, which leads me to my 4th point, which is deciding where the market is likely to move to. First of all, you ascertained where it's likely to go as far as direction. Now we want to figure out where it's likely to go as far as price. Based on the analysis that I can see on this Ethereum chart, I think that Ethereum is going to rally a little bit above $2,000. That's my price target on Ethereum. If we press play here, we can see that that's exactly what it did. Ethereum rallied up to around $2,150, which is actually the exact price target that we set on this channel. We said $2,175 a couple of weeks ago. It went to $2,150. After you've decided which direction you think the market is going to move and you've decided where you think the market is going to move to, now you need to set up a trade. And guys, this is a step that people skip all the time. Normally, people follow step 2, 3, and 4. Sometimes they'll skip step 1 and they'll trade on whatever, and then they'll get wrecked because they're in the bad project and they shouldn't be trading. Number 457 over on CoinMarketCap. Sometimes people skip step 1, but so many people skip step 5, and I'm warning you, if you skip step 5, kiss your chances of being a profitable trader goodbye. Guys, I've made hundreds of thousands and millions of dollars in cryptocurrency. I've been working here for years. Just trust me. That's what I'm saying. Just trust me. Don't skip step number 5. Here's step number 5. Use a trade setup. I mean, on literally every single trade. Always use a trade setup. That's step number 5. If we go back to this hypothetical market, I'll show you how I would have set a trade setup for this trade. I would have put a open price right here around $1,890, right above my level of resistance. I would have put my stop loss somewhere here in the middle around $1,800, and then I would have put my price target just a little bit above $2,050 because that was a little bit below where I thought the market was going to go. Pro tip, if you think the market's going to go to, say, $2,200, I would encourage you to set your exit around $2,150, because oftentimes what you'll find is that markets will rally close to the level of resistance, but sometimes they won't quite get there, and you want to make sure that you actually get the trade to exit when you want it to. You don't want to get $2 away from the exit and then it not trigger, and then you're just SOL. So guys, always remember to use a trade setup. Let me break down the 3 parts of that. You have your exit price, you have your open price, and you have your stop loss. Your exit price is the place that you're going to sell, hopefully in profit. Your open price is where you're going to enter the trade. So if we're going to enter a trade on Ethereum at $2,000, $2,000 is our entry price. Our exit price is where we think it's going to go to. That's where we're going to get out of the trade and take our profit. And our stop loss protects us in case the market goes too far to the downside. We always want to use a stop loss. Sometimes people don't use stop losses. Sometimes people argue with me and say, oh, Jebb, I don't need a stop loss. If you don't use a stop loss, you're making a mistake. Not even going to argue about it. It is fact. It's just easy. Seriously. It's just use a stop loss. Do yourself a favor. Use a stop loss. A stop loss is where you exit the trade in case the trade is getting too bad to lower the risk of losing a ton of money. It is how you calculate risk to reward ratios, after all, which we talk about all of that and more in the Academy, linked in the description box down below if you want to learn more. I can't condense 12 hours of content in CT2A down into a 10-minute video and get all of it in here, so learn more down there. But that leads us to step number 6. And I'll start step number 6 by quoting none other than Dwight D. Eisenhower, who once said, "Plans are useless, but planning is indispensable." What does he mean by that? Well, guys, at the end of the day, sometimes you'll make a plan in life and the plan will not go to plan. Sometimes you're going to make a plan and you're going to realize halfway through the plan, okay, I actually need to do this in a completely different way. What Dwight D. Eisenhower was saying, former general of during World War II and former president of the United States, was saying is that plans are useless because they might need to change, but the act of planning is indispensable. Why? Because once you've thought about something, you are prepared for it. What's the Boy Scouts motto? Be prepared. What did my dad always tell me? Know your song well before you start singing. Know what you're doing before you get into it. So that's step 6. Use wisdom and realize that the trade setup you just made and all the technical analysis you just made, it's very important you follow those steps, but if something has to change on the fly, then use your expertise in trading to make sure you can do that. Don't get yourself locked into a plan that may end up putting you in a bad situation just because you want to be 100% stuck to your plan. If things need to change, things need to change. That's where wisdom comes in. If anyone doesn't know what wisdom is, I will boil it down to one word: experience. Either your own experience or experience you've learned from someone else. That's really what wisdom is. Keep to the plan for as long as is wise, but if you need to go off script, don't get too concerned about doing so. So guys, those were the 3 skills you need. You need to know fundamental analysis, you need to know technical analysis, and you need to know how to set up trades, all 3 of which we teach with the link in the description box down below. And the 6 steps of trading are as follows. Number 1, pick a coin with strong fundamentals. Pick a coin with high volatility and high volume. Make sure that you're in a cryptocurrency that's not going to throw you a curveball. Step number 2, do technical analysis on this coin and understand what the technical landscape, what the charts of the coin look like. Step number 3, decide based on that technical analysis which direction the cryptocurrency is more likely to move. And remember that you can never predict anything with certainty. It is all about probabilities. There's a video in the course down below called The Game of Statistics and Probabilities. I explain more in that video. Step number 4, decide based on your technical analysis and which direction you think it's going to move, where you think it's going to move to in terms of price. You think it's going to go to $2,000 or $3,000 or $20 or $100? Where do you think it's going to go? Step number 5, use that skill set you built earlier and set up the trade and stick to it as long as you can. And that leads us to step number 6, use wisdom. All good traders understand what they're doing. They're not looking for someone else to give them the answers. They know the answers themselves because they are, after all, experts. I want you guys to become experts in trading, because when you become an expert in trading, the possibilities are endless. You can make as much money or as little money as you want. You can work as many or as little hours as you want. You can do this, guys. I believe in you, but it's not going to be easy and it's not going to come simply. It is something you're going to have to work for, and I'm not going to hand it to you on a silver platter, not because I don't want to, but because I can't. You need expertise in this. You need experience in this, but I know you can do it. Guys, if you want to learn more, like I said, the first link in the description box down below will teach you more, so check us out down there. If you enjoyed this style of video, let us know in the comments section. Make sure to like and subscribe to the channel. Follow us on Instagram and Twitter. But guys, that is going to wrap it out for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.